What's going on, Mullen Automotive fans? Welcome back for another video. Appreciate you guys for tuning in as always and your continued support to the channel. In today's video, and as always, if you've been watching my channel, I'm not going to get on here and talk about things you may want to hear because the stock price is going down. I'm not that type of YouTuber. I'm not going to get on here and see right above my head that the stock price is currently down about 17% and tell you there's a chance that Mullen is going to run going into the end of this week. No. But we are going to talk about, however, this price action that you're seeing here today that's been really repetitive over the past months. The stock trends down, then we get pops every now and then. We're going to talk about exit liquidity. And during these pops in stock price, you may see some of the bears over on social media message boards talking about exit liquidity during those times as well. This is not the first time I've seen something like this brought up when Mullen has these random pops here and there. Says, let's give a nice round of applause to our new exit liquidity investors. He's talking about more than one person that is involved with the stock price going up to around that 32-cent level before it's coming back down. And I know you guys enjoy hearing about the latest updates here and there for Mullen Automotive stock. You know, want that to be talked about as well. But as you can see, the stock continues to trend down no matter what news comes out from Mullen Automotive. Me personally, I think Mullen needs like government funding. I think that'll be the main thing that brings Mullen back to life. And some may say, didn't Mullen already get selected for near future government funding possibly? Well, if they did, then they really wouldn't need toxic lenders still, right? These warrants getting exercised, diluting the share price more. And you might say, hey, Mullen doesn't need government funding when they're going to be producing these EVs, delivering these vehicles, and creating revenue. But would that be enough revenue to sustain when production costs? They're going to continue to rack up production costs in these type of economic environments. And with Mullen's small vehicle deliveries here and there, 5 to 10 vehicles, that may not be enough revenue to support the amount of production costs or any other future acquisitions that might take place that requires more capital, which usually comes from shareholders being diluted. Until Mullen can be able to prove and produce in mass quantities, as well as make big delivery numbers, they will continue, in my opinion, to go back to these toxic financiers that many of you have heard me discuss over and over in other videos. As far as the extension, that's the reason why I want to talk about exit liquidity, because I think the same thing is going to take place if Mullen gets an extension. There's going to be a pop in stock price, allowing these unidentified whales to buy the stock and then sell it off the next day, just like they are doing with the stock price here in the past trading day. And I know I spent a lot of time on this screen, but I did want to mention that there has been elevated volume, trading volume in the previous day, along with elevated off exchange volume and or dark pool. As you can see, that spike up near 80% off exchange. So there's a lot going on in the dark, and people are wondering what took place yesterday that allowed Mullen stock to go up about 30-something%. Mullen execs own just 0.46% of shares outstanding. Meanwhile, Liquidity Capital, Asusa Holdings are listed as 5% beneficial owners of Mullen stock. Liquidity beneficially owned 85.76 million shares, while Asusa owns 66.72 million shares. Liquidity's stake consists entirely of common stock issuable upon the exercise of warrants, while Asusa's stake consists of 55.48 million shares issued upon the exercise of warrants. That signals more dilution for shareholders when these two entities decide to exercise their warrants. So the execs of Mullen Company barely own any of the outstanding shares, yet they have these toxic financiers with all the shares and are able to sell at any time they want, diluting the share price. Why did Mullen go up yesterday on the same day that their execs got called out for having small positions? The lawsuit was just updated yesterday, and I told you guys a while ago that this may take a long time, and that these brokerage firms that they're accusing for these accusations, Charles Schwab, Fidelity, might point the blame somewhere else, or either drag this thing out so that there's fees to be paid, as well as knowing that Mullen doesn't have much time on their hands. They're trading at around 25 cents. These are all just my thoughts and opinions. I'm just sharing information with you all, so take it how you want to, and as well do your own due diligence. But Mullen now has until November 30th to file an update complaint, while the parties involved in the complaint have until December 15th to jointly file their case management plan. Mullen did not provide any further details on why Judge Annalisa Torres issued the amended complaint deadline. Wow, what a lawsuit update, right? That was quite an update. Is that why the stock price went up? They got more speculation here talking about a short squeeze on Mullen, given the numbers on short interest data, the cost of borrow fee data. We've seen numbers higher than that with Mullen Automotive. So why are they talking about a short squeeze again? And this article actually came out yesterday as well, while Mullen was popping in the stock price. So was it an attempt to bait retail in for this sell-off today? And lastly, they think that investors are chatting around on social media with speculation that an extension has already been approved or confirmed, which it has not yet. All right, exit liquidity. While the stock continues to pop every now and then fades even lower. The fear of missing out, FOMO, frequently impacts investors' choices in investing. They may generate some profits if they enter the market at the right moment. However, if momentum turns against them, the FOMO investors may fall prey to sudden price movements. Ultimately, they end up becoming exit liquidity. This means that they buy assets at high prices and then become liquidity for early investors to sell the assets they already have. As we know, all markets are based on liquidity, i.e. the amount of money available in the market. High liquidity means you can sell assets easily without significantly affecting prices. Low liquidity makes selling assets more difficult, and even a small sale can result in the price crashing. FOMO can also be a deliberate act with whales, those possessing huge amounts of assets, the ones pulling the strings. The whales will not sell their assets when the liquidity is low to avoid price crashes. Therefore, they will work around this by increasing the asset's liquidity, which is why we had a high volume day yesterday. They do this by creating hype for the assets they want to sell. If successful, the hype can make investors interested in buying their assets due to FOMO. By having a standby buyer, whales can sell their assets without worrying that the price will drop significantly. However, when the hype wears off, the asset's price and liquidity will decrease, like the volume is today. The whales are unaffected as they sell the assets when the price is high. Meanwhile, new investors who buy at high prices may experience losses, and the new investors then become the exit liquidity for the whales. Another way these whales can create exit liquidity situations is by market manipulation, such as wash trading or spoofing, that can create artificial price movements that lead to investors becoming exit liquidity for others. For example, a manipulator may create the illusion of high demand for a particular cryptocurrency or stock, enticing investors to buy in. Once the price has increased, the manipulator sells their holdings, causing the price to drop and leaving other investors with liquid assets. A few red flags that may signal potential exit liquidity risk in companies such as Mullen Automotive is red flags may include unrealistic promises, lack of transparency, aggressive marketing tactics, sudden price or volume spikes, and a history of failed projects. I hope you guys can take this information and really analyze your situations with Mullen Automotive And I hope you guys can be able to see where I'm coming from with this video. If not, leave your thoughts and opinions down below. I really would like to know your feedback on that. I need more people to be able to watch this video, so please hit that like button and consider sharing and subscribing, because I know a lot of people may not want to hear this information. They rather go hear about rainbows and unicorns in each and every video. And if you made it this far in the video to the end, let me know down in the comments. Thank you so much. God bless, and I'll catch you in the next one. I'm gone.